Hello traders, welcome to BTF 207, our lesson on pivot points. I'm Orlando Gutierrez for binarytradingfinance.com. Please take a moment to go through our risk disclosure. Remember that trading binary options is a challenging endeavor, but can be highly profitable for the educated and disciplined investor. On this lesson, I'm going to define what pivot points are. Then I'm going to show you how pivot points are calculated. And after that, we're going to see how to use pivot points on your binary options trading to determine market sentiment, to look for possible reversal areas, to confirm a breakout, and how to use pivot points for further confirmation on your setups. So, what are pivot points? Pivot points are potential areas of support and resistance that are automatically plotted on your charts. There's no discretion needed from your part in picking previous highs or lows to draw these levels. This indicator automatically plots these levels on your charts. Because so many traders are looking at these pivot levels, price tends to react sharply to them. Not only you are going to have the pivot points on your chart, but institutions use pivot points, retail traders use pivot points, banks use pivot points. Pivot points have been used for years, and because so many traders are watching these levels and are trading off these levels, price will react sharply to them, and we are going to use this to profit from the markets with our binary options trading. Now, how are pivot points calculated? Pivot points use the prior period's high, low, and close to calculate future support and resistance levels. Daily pivots use the last day's high, low, and close. A monthly pivot uses the entire month's range, its high, low, and close. This is why pivot points are predicting or leading indicators. Now, I know this sounds a little bit messy, but I'll show you the exact calculations right now. The first thing the indicator does is to calculate the main pivot, or the pivot point. This is calculated by adding the high price, the low price, and the closing price, and dividing it by 3. Based on this result, the indicator now calculates the main support and resistance zones. These are called S1, 2, and 3 for support, and R1, 2, and 3 for resistance. The S1 is calculated by multiplying the pivot point by 2 minus the high price. The S2 is calculated by subtracting the high price to the low price and then subtracting that to the pivot point. The R1 equals pivot point times 2 minus the low price, and the R2 or resistance 2 level is calculated by subtracting the low price to the high price and adding it to the main pivot point. You don't have to know exactly how pivot points are calculated, but everybody understands this, and every trader understands how these pivot points are calculated, even though they are plotted automatically on your chart. By knowing these calculations, it'll be easier to know for sure that this level is a level of support or resistance. How to use pivot points? Pivot points are used to determine market sentiment. This is the first one. Let's see pivot points playing on a short bias or down market when price trades below them. This is the Aussie US dollar daily chart. The down move on the Aussie USD is massive, as you can see on this chart. Price hits an area of great support, testing it twice right here. So we might think that we have a reversal trading play. But wait a minute. It moves back up to test and fail test the main pivot twice just to continue to the downside. Okay? So we will be looking to buy puts when price trades below the main pivot. What have we learned here? Even though we might have a reversal pattern when price hits a clear bottom at the blue line, price continued to trade below the main pivot. And by trading below the main pivot, our bias remained short, so we'll be looking to buy puts. Had price broken above the main pivot, the reversal would have been confirmed, and we would have been able to look for opportunities to buy calls. Now let's have a look at a long bias or an up market when price trades above the main pivot. This is the US dollar Swiss franc 1 hour chart. There is no clear direction on the US dollar Swiss franc for days when its price is trading inside this wide range. Even though it's difficult to trade it, we know that price has been testing the main pivot as support. This is the monthly pivot, and as you can see, price is testing it quite nicely as support, giving us opportunity to buy calls on the short term for a clear bounce off the main pivot. So we have a long bias due to this, and we are looking to buy calls because price is trading above the pivot. Now, pivot points are used to look for possible reversal zones. This is very interesting, and we will be using it a lot on this course strategy. This is the Swiss franc Japanese yen 50-minute chart, and we are using the daily pivots. Why are we using the daily pivots? Because we are in a 15-minute chart. If we were analyzing price action on a higher time frame, like the 4 hours, we will be using the weekly pivots or even the monthly pivots for the daily time frames. But since we are looking for short-term reversals and intraday opportunities, we are using the daily pivot and the 50-minute chart for analysis. We know that price is trading below the main pivot, so our bias is short. Okay, this is the main pivot or the daily pivot, and price is trading below it. The areas to look for a possible reversal to buy calls on a short-term reversal play is the daily S1, S2, and S3. In this case, the S1 and S2 got broken right here, okay? And because these areas of support broke, we could have bought puts when they broke, okay? But since we are just looking for reversals, we wait for one of these areas to hold. S3, however, has been tested twice, and a nice doji is forming for a possible double bottom right here. So S1 and 2 broke to the downside, but S3 is holding. I mean, the move looks really overextended, and if we get confirmation of a reversal after that big and thin doji, we can buy calls for a short-term reversal on the 15-minute chart, and we can use an hourly expiry option or call option on this trade. Pivot points are also used to confirm breakouts. Let's see. This is the US dollar Swiss franc 1 hour chart again, okay? We have found an area of resistance around 0.9000 that has been tested twice. Here's the area that we're talking about, okay? Since this area has been tested twice, the first thing that pops to our mind is to buy puts, okay? Because it has been tested twice and rejected, then the area is holding, and a bounce play is what's more appealing at the moment. So our idea is to go and buy puts at the next test. We now plug the weekly pivots to confirm long-term resistance. Here's the chart with the weekly pivots, and in blue the resistance area at 0.9000. Price breaks out of the weekly pivot and the 0.9000. Then our idea is now invalidated, and we buy calls at the breakout. And since the weekly pivot was in confluence with a strong area of support and a psychological resistance, remember that round numbers are psychological areas of support and resistance, and price broke it very harshly, we can buy calls on a momentum play to the upside. Okay, the weekly pivot here helps us to confirm a strong area of resistance and a breakout to the upside. Pivot points are also used for further confirmation on your setups. This is again the US dollar Swiss franc 1 hour chart. There is a possible range in play. Right here and right here we have support and we have resistance. Our idea is to play the range and keep buying puts at the top and calls at the bottom to profit from the bounces to the upside and to the downside. We plug in the weekly and monthly pivot to confirm these support and resistance zones. And boom, what do you know? The monthly pivot is being tested as support harshly, and the weekly pivot is being tested as resistance. So these two areas are now confirmed as strong areas of support and resistance, so we can continue with our idea to buy puts at the top and calls at the bottom. The range is now clearly defined by these two pivot points. The probability of our trade is better when we have a double confirmation, either of a bounce or of a breakout out of the range. Thank you for joining us, and I'll see you guys on the next lesson.